When the stock of a terrific company goes down off a big number like an overheated consumer price index report, is it a good chance to buy? Take Shopify, the global commerce enabler, which was down more than 13% today, simply because of the quarter. But I'd argue it was down in spite of the quarter, because those results were terrific. Shopify delivered better than expected gross merchandise volume, revenues, earnings, and some spectacular cash flows. They also gave great sales guidance for the current quarter, which suggests that the momentum is still going very strong here. The only thing to quibble about were maybe some of the margin lines. I mean, look, they're trying to spend to help their customers do better, so Shopify can do better. Nothing wrong with that. I don't think that justifies the stock's 13% decline. I mean, the darn thing gave up all of its year-to-date gains on today's slide. My view, this is one of the biggest winners of 2023. Got overheated this year, got a bad CPI number. Bulls jump ship, time to get back. I see it as a buying opportunity. Let's take a closer look with Harley Finkelstein. He's the president of Shopify to learn more. Mr. Finkelstein, welcome back to Mad Money.
Hey, Jim, always a great honor to be on your show.
Oh, thank you, Harley. In the years we've known each other, I feel that your terrific company's gone from being a fantastic back office fulfillment to what I guess now I have to call a unified commerce platform replete with some big offline sales. How did you go about making this journey? And is that a better name than saying it's just a fulfillment house?
Well, look, 2023 was an exceptional year for both Shopify and for the millions of merchants that we power. I think Shopify is fundamentally transforming the way that businesses and consumers do commerce. And we're operating with great, strong operational discipline and velocity. You mentioned this, but it's worth repeating. For the full year of 2023, we powered $236 billion of GMV. And for Q4, we powered $75 billion of GMV. Now, that outpaces the broader U.S. retail market. So merchants and brands on Shopify are doing better. And Jim, one thing I'm really proud of is we now power over 10% of all U.S. e-commerce. When you look at our merchant base, to your point, you see more and more businesses at every stage of growth coming to Shopify, including iconic brands like On Running and Billabong and Everlane and Nike Strength and Oscar de la Renta and so many more. And for the quarter, we had revenue surpass $2 billion, and we had $1 billion in gross profit. For the entire year, our revenue was $7 billion for 2023. But finally, and I think really importantly, we generated cash flow of $446 million for the quarter and free cash flow of $905 million free cash flow for the year, with every quarter free cash flow margin and dollars improving. So we're really proud of these results coming out of the year.
Oh, you should be. Now, Harley, when look, we have many different times that we can talk. And you know I love the empowerment, sir. I love what you've done to entrepreneurs that would otherwise have no hope, and how you've helped them with money. But I got to tell you, I'm looking right now. I Googled, just right before we talked, Oscar de la Renta clothes. I figure, I don't know, maybe $800, $100. No, $5,400, $7,990. Here's one for $8,920. People buy this stuff through Shopify?
We are powering millions of stores across the platform. And to your point, one of the things that I think that has changed is there's all these new ramps into Shopify now, which means more businesses across more industries, whether it's luxury or it's companies that have everyday T-shirts and verticals are buying from Shopify. But you mentioned a few things that I want to double click on. With our focus now on things like offline retail, B2B, and enterprise expansion, what we're seeing is so many more businesses are using what we're selling. So if you just think about physical retail, for example, like point of sale, offline for the year, we saw $441 million of revenue to Shopify for the year, 5x what offline was for us just 5 years ago. In fact, GMV from offline retail was up 28% for the quarter year on year. And we're seeing brands like Banana Republic Home come to us to power all their point of sale. We're also seeing incredible growth.
Harley, we had Dave Gitlin on the other day. You know Dave, right? He's the CEO of Carrier. Now, they make HVAC. What's HVAC doing on Shopify?
I was about to say that. So one of the new areas, one of the new on-ramps into Shopify is B2B. More wholesale-only merchants like Carrier, a heating and cooling company, are coming to Shopify. It's quite unbelievable. B2B GMV was up nearly 150% year on year in Q4, and total GMV for B2B doubled in 2023, and we expect it to continue. So not only are brands like Momofuku or Brooklinen, who also have online stores with Shopify, expanding to also do B2B or wholesale, we're seeing pure B2B plays like Carrier come to Shopify too. And that, by the way, that B2B market, that's a $14 billion TAM that allows us to expand to more merchants in more verticals.
How does a Japanese liquor company come to be able to do business with Shopify?
Same thing. We think international is a massive area of growth for us. And so we're expanding both our capabilities and our localization efforts to get companies like, obviously, Suntory in Japan, but West Wing and Bowdoin in Europe, and On Running, of course. As I mentioned, we're really trying to create a global commerce platform. So not only can any brand of all sizes use Shopify, but once they start selling with us, we want it to make it default global, meaning we want their customer base to be global. And with our products like Markets and Markets Pro, we make selling on Shopify, selling internationally on Shopify, as easy as it is to sell locally. And that really matters in this sort of new global paradigm.
But you have not forgotten your roots. I noticed in the conference call, once again, you talked about advancing money to promising young businesses that otherwise would not be able to grow, hire, give health care to people, generate income for their families. You're not backing away from that.
Not at all. In fact, we've now given up more than $5 billion of capital to small business to help them grow. Because we have such a great view of what our merchants are doing and how they're operating on Shopify, our ability and our access to making these great instant underwriting decisions means we can fund small businesses in a way that most other companies cannot. In fact, you mentioned sort of some of these macro trends in CPI coming out earlier today. One thing that I really think is important to understand is I think 2024 is the year for entrepreneurship. 25% of U.S. consumers are now considering starting a new business in 2024. And if you look at business registrations recorded since 2021, in the U.S. alone, it's 15.5 million. That's an 85% increase from 2004 to 2021. So it feels like it's never been a better time to be an entrepreneur. And we're seeing so many of those businesses being started on Shopify. And the best part is, as they grow and get larger, we can help them.
I just got 10 ideas for the next shows. I'm in great shape for the rest of the week and beyond. Harley Finkelstein, president of Shopify. Hey, good to see you. I think you still have some enthusiasm for the job.
I definitely do. I love what I'm doing, and I'm just so proud of what we've done.
And I love when you come on the show. Thank you so much. Shopify's a buy, and we'll talk soon. Everybody's back there for the break.
Coming up, Cramer does a little networking. Everything you need to know about a tech stock with a strong track record. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.